Hello, I'm Huntsley from Livewire Markets and welcome to The Pitch. Joining me today is Clinton Arentz from Trilogy Funds. Clinton, let's talk about something that you know a lot about, and that's industrial property. Maybe to start with, just tell us, what is it and how does it differ from the other sub-asset classes of commercial property?
Good question to start with, because what it is a growing sector. The type of uses for industrial space are expanding all of the time. The rise of e-commerce and supply chain logistics management has changed industrial permanently. We see it as a rapidly expanding field of a range of different uses in what you might loosely call warehousing and industry. Okay,
excellent. So why is now specifically a good time to invest in industrial property?
Well, you got economic reboot post-COVID. A lot of companies want to get on with getting on, rebuilding their businesses, expanding their networks and their supply delivery capabilities. We're seeing demand push right across the country for good warehousing space. And as I say, that can take a number of different forms.
Okay, and who are you seeing that demand from, if I may ask?
Well, a lot of companies are bringing their manufacturing back on shore. A lot of companies are aware now of the vulnerabilities of supply chains, particularly international support around supply chains, so they want to bring that on shore. They want to be closer to their customers. The rise of e-commerce, as I mentioned, has just driven that growth exponentially because every e-commerce user generates warehousing space. Not just retail delivery to the door. To get those goods to the door needs warehousing space, usually closer to home than it's ever been before.
Yeah, all right. So how is industrial property different from other jurisdictions?
Well, industrial property in Australia typically attracts a higher rate of return than perhaps internationally for that sense. And traditionally it's attracted a reasonably high rate of return as against certainly residential, where it's much higher rate of return, and usually commercial as well.
Okay, so if it attracts those good returns, how do you see returns in this particular subsector panning out over, say, the next 5 years?
I think they're only starting to get their growth patterns now. As I say, this reboot post-COVID takes a while. You know, manufacturing and delivery takes a while to establish. These premises take a while to create. And of course, we're waiting for more available land so we can build new premises around the country. So, as I said, there's tremendous demand push. Tenants are really screaming out for space in some areas, and councils need to probably focus more on rolling out land availability so that this space can be created.
And I take it that scarcity of the land coupled with the large demand, those are really those key tailwinds, I take it.
Look, they're the drivers, the economic drivers, sure, if you like, and they're the income drivers, definitely.
Let's talk yield, as you were just mentioning. They're seeing the return of yield in asset classes that for many years didn't have any. How do you see yields and distributions holding up in an environment where income investors actually have so many choices?
Well, they have choices, but they don't necessarily have the choice of a long-term stable income stream. And we have a weighted average lease expiry in our trust of approximately 6 years. Some of our assets are up to 10 years in lease expiry. So that's a certain income stream for that period of time, typically. So that's a pretty attractive return prospect for some investors who want to sleep at night and still get a reasonable rate of return.
Okay, well, I was about to ask about that. So you're talking about weighted lease average of 6 years, some of them up to 10 years. What does that actually mean if I'm an end investor? What does that actually mean?
Well, it means you're not incurring releasing costs. It means you're not incurring vacancy costs or undue holding costs. A steady, reliable income stream is the key to that.
All right. Clinton Arentz from Trilogy Funds, thanks for joining us. And thank you for joining us as well. If you enjoyed that episode of The Pitch, you can subscribe to the Livewire Markets and Market Index websites as well as our YouTube channel. Thanks for watching.